Hello friends, this is Raj Sastri from Raj Option Trading. Today is May 20th, 2022. Hope you're all doing well. So market is very volatile. In this volatile market, we can make some good money by buying put options or put spreads. So when the market is very volatile, when the IV percentile is very high, I would prefer put spreads. But in the low IV environment, I prefer buying put options outright so that we can make some good money. So as a traders and investors, we got to play the higher side or the long game by buying great stocks, and we should also play the short game buying put options on those overpriced stocks so that way we can make some money as they go lower. So with that, let's jump in. Look, we got a company here, Golden Ocean Group. Stock has been going higher of late. It's into dry bulk shipping. Stocks like that I would buy put options slowly so that way I benefit from stock coming down as you go forward. So with that, let's jump in. Look, I'll take you to browser here. One of my favorite tool, which is Finviz. Finviz is a very nice tool. As you can see here, I got a quick screener here. What I'm doing here is I'm looking at stocks over $15, as you see here. And I also say from an industry perspective, stock only. So I'm not interested in the ETF at this time. And also I want high current volume. I say volume more than 1 million shares traded, as you can see here. And I get my list here. So look, I got my list here with the GOGL, which is Golden Ocean Group on the top here. Look at the stock chart here. Nice uptick. I like the uptick here. Typically when that happens, and I also sorted this by 52-week high. All these stocks are hovering around the 52-week high. Those are my primary candidates as I buy put options or put spreads. Top of the list, look here, we got GOGL. Stock has been going higher of late. And typically what I also do, I typically go to snapshot to get a very good view of what's going on here. Look, I go to snapshot here. I get my stock here. Let me go back here. Looks like it shifted slightly. And let's go back here. Look, I got my GOGL here. So I could go into GOGL and see what's going on here. Look, I go into GOGL. Stock is going higher. Look, nice uptick. So the moment I see these type of things going on here, I look at the fundamentals and see what's going on in the fundamentals. As you look through from a fundamental level, looks like stock is having nice revenue growth here. That's good here. Stock is up of late from a earnings per share perspective, and look, they're also diluting the share count by issuing more stock. And if you look at the analyst here, from an analyst perspective, looks like it's a little bit old here. We don't need to worry too much about it. It's a little bit old here. And from a news perspective, look what's going on here. Look, we got here Golden Ocean earnings soar following the hot results from various other shipping stocks here. So at these levels, I'm interested in the short type candidate here and buy put options. So what I would do here, and I would also look at some of the numbers here. Look, this company has got a positive profit margin. That's why you got to be a little bit careful here. But given the stock has gone up so high here, I'm going to be looking at a buying put option type strategy. So I go to my Thinkorswim platform here. I put GOGL. Look, GOGL, I got here a chart here. It's an 18-month chart, as you see here, year and a half, and nice uptick as you see here. Stock is trending higher. As you look through here from an IV percentile perspective, IV percentile is 45, not too high. And look, from a check-in money flow perspective, smart money is flowing out of the stock right now. That's why it shows a little bit down arrow here. But looks like folks have been buying the stock. That's why on the balance wall is going higher. DMI perspective, DMI is also going higher. So this is a time where I would slowly look at initiating a buy put option type strategy here so that I can benefit when the stock goes up so much high like this. Look, it's hitting the upper channel in the in the standard deviation channel here. So I'll be looking at buying put option here. So I can, because IV percentile is not super high, it's just 45, we could buy put options easily. So I would go here to the trade tab here and I would look at the GOGL. Look, I got here September 16, 2022 here, and if I bring this up, look at the detail here, 52-week high is 16.40. I think we are very close to 52-week high here. So I would go here. These shipping stocks have got a tendency to go up and down a lot. This is going up off late, so I would just go here. Current price is $16 here. I would look at put options here. Look, $12. There is nice put option volume. $15. There is some good volume here, and $17 also there is a good volume here. I would typically look at, this is the not very expensive. I would rather go with the 17.5 or even 15 is also okay, but typically I would prefer going a little bit higher. You can look at the delta here. Look, as you look through the delta here, you got 67 delta at 17.5. I typically like delta around 70 or so. It's 67 works for me. I would go here, initiate a buy here. I would go buy GOGL and go from there. And you could also look at the analyze trade here and see what's going on. As you look through the analyze trade here, let's look at the profit, the risk profile here. As you look through risk profile here, look, we got GOGL here and we got September 22. And as you look through here, we can make this September 22 here. All right, 23 also works. Let's 16 September. There we go. So look, we got our chart here. As the stock goes down from here, right now it's around around say right, we have stock prices around $16 or so right now. As the stock falls down, we start making good money. Look, as the stock falls down, our profitability increases. So that's why I like this strategy here. That's why I would go initiate a buy position in GOGL, given it's a little bit higher this time, and confirm and send. All right, so as you look through here, we got more stocks to go here. We can look at a few more here. Look, after GOGL, we got a few more. Look, we got SQM here. This one has been partying like no tomorrow. Look, stock has been going higher. It's into chemicals, as you can see here. And look, it's right now, as you see here, it's at it's 52-week. It's above 52-week high. I'll be looking at such names here. Stocks cannot go up, all the way high. Look, this one has been going high and partying very nicely. Look, nice parabolic type move here. And right now it's showing some weakness, as you can see here. These type of candidates, I do buy put options all day long. And as you scan through here, looks like insiders are owning good chunk of stock here. And nothing much going on the insider transaction. But as you look through here, we got profit margin 20%, which is not too bad here. And look, from a profitability perspective, from a earnings perspective, it's doing pretty okay. Nice clip here, as you see here. EPS is growing. Sales is also nice clip here. And we got shares outstanding slightly increasing. And look, we got a downgrade from Morgan Stanley back in March. It's also again a little bit dated, as you can see here. So at these levels, I'm pretty comfortable. I would rather, look at this pop here. Stock has popped. I would look at this pop and fade the stock, by buying put option. So as I take you to Thinkorswim platform here from TD Ameritrade and say SQM. All right, so let's look at the chart here for SQM. There you go. We got our chart. Look at the stock here. Parabolic move. So that's the ideal candidate for me to buy put option. And also I kind of look at the IV percentile. So let's bring up the IV percentile. I can go here and I got here my strategy and I got few strategies here and I got my IV percentile right here. Let me add it to the chart here and I can look at the IV percentile at the top. Look, IV percentile is high for this one here. it's about 80. So what I would do in these scenarios, when the IV percentile is high, I would rather go for a put spread. So let me go back here to trade tab. Because I'm buying a put option, I want to go a little bit long term here. 119 days works out for me. And look, stock price is around 95 here. I would probably buy this 195 spread, or I would even go and buy 105.95, this $10 wide spread here. So as you see here, delta is 51 at 105, stock price is at 95, and we got here all-time high 96, very close to all-time high. So I would do something along these lines here, by 105 and 95. So look, I would do here, go buy a vertical spread here, and do buying 105 and selling 95. Alright, so I pay $6.10 here, and remaining portion of the $10 wide spread, which is around say $4 or $3.90, is my profit potential. So I would go ahead and confirm and send this and go from there. Look, if the stock price stays below 98.9, I make money. That's my break-even point. But if stock goes all the way down, my maximum profit is $390, and I'm putting $610 to risk here, which is pretty okay. But if you're a little more aggressive, we could even do a back ratio spread, which is one of my favorite strategy. So if you want to do back ratio spread, I would say do same story here, 105.95. So I would say buy a back ratio put spread here. And there you go. We are buying two at $100, as you can see here. We are buying two put options at $100, and we are selling a put option at $105 at the higher level. So as you look through, I will take you to the Analyze tab here, so that way you can look at the profitability chart here. As I take you to the Analyze trade here, and look, we got our backward ratio here, ratio spread. The maximum money that you lose is if the stock stays at $100. So this stock is already at $95 or so. If it stays at 100, you will lose some money. But if the stock goes below $100, it's already below $100, as you can see here, you will start making good amount of money. If the stock stays above if the stock stays the maximum loss is at here when it's $100. If the stock goes higher, you don't need to worry too much. You'd be okay there too. So with that, what we'll do is we'll go in and initiate the trade. All right, let's go back here, and look, we got our trade right here. And for this trade, as you can see here, we are buying two SQM at expiration is 16 September 2022 at 100 strike, and we are actually financing it by selling one put option at a little bit higher strike price, 105. So it's actually $5 wide spread here. So you're paying $13. You can confirm and send here. As you see here, I like these type of bets because it gives you very good profit potential. Look, your maximum loss is $1,800, and your maximum profit, look here, it's 8,106. That's why I like the ratio back spreads, because it gives you very good profit potential by putting some money, not too much money here. Look, your cost of trade is just $1,300, and your max loss is $1,800, but your max profit is very high. So I take these type of trades all day long when the stock is hovering around around 52-week high, and when the fundamentals are not great. Look, we got a few more names here. Also as you look through here, you can quickly hover. Stocks like NRG, again, this is parting like no tomorrow. I would initiate a put spread or put depending on the volatility level. If I take you to NRG quickly here, so we got NRG. All right, so let's go to NRG here. I will take it to the chart. Look, NRG is parting like no tomorrow. Look, nice uptick here. And look, on the balance volume is going higher. It's all bullish. Things are all looking great here. And look, by looking at the stock chart here, it goes up, it comes down, goes up nicely, comes down. This is parabolic move. That's what I'm trying to take advantage of and buy some put options. Look, volatility is high. When the volatility is high like this, I like to do put ratio back spread, which is one of my favorite strategy. And let's go back here and look at the trade tab here. By looking at the trade tab, look, we got here $46 stock here. All-time high is 46.71. It's hovering at the all-time high here. And look, as you look through here, about $46. You could even go to $50 here. $50, I would do a put ratio back spread right here. So I would go here and buy a back ratio spread here. So I'm buying, a higher price. I'm selling a higher price put option at $50 and buying two lower price put options. So I'm really financing my low price put options, low strike price put options with the high price put options. So that way it works out. So I'm paying very less money here. Look, I'm just paying $4.95. If I go to analyze tab here very quickly, from a trade perspective, my maximum loss is when the stock stays right at $49. But if the stock goes below $49, I start making good amount of money. That's why I like this strategy here. You're not losing too much, but there is a lot to gain here. And these stocks are hovering around 52-week high, parabolic move. So I'm trying to fade the move here. All right, so let's go here and let's basically buy this put option here, put spread. There you go. That's one of my favorite strategy. And look, I've been playing around with some of the short plays here. SOXX looks like I got nice profit here, $4,500. I can cash in some of my short positions here like SQQQ, SVXY, all are having nice profit here. So I like to when the stock market goes higher, I would buy some of these inverse ETFs, and so that way when the stock market goes down, you have some nice money. You don't need to worry about stock market going down. If you are if you can buy some of these inverse ETFs when the stock market is rallying, you have a nice profit margin when the stock market tanks. So that way you're not worried. As a traders and investors, we got to play both sides of the game here. You should be buying the long when the stock market tanks big time. When the stock market rallies big time, buy some of these inverse ETFs, buy some of these put options like we are doing right now, and also buy some of these back ratio put spreads. You will do great. Don't need to worry. You would wait for stock market to tank so you can make cash in and make some money. So with that, thank you very much. Happy investing and trading. Please subscribe.